Yeah, we are live. So, welcome anyone who happens along. Our purpose here is to produce a podcast, but we're inviting you all along. I'm Warren Whitlock. This is Distributed Conversations. On my left or right, depending on how it happens to appear when it gets to YouTube and it gets recorded, is Michael Terpin, chairman of Transform Group, and so much else. We've been friends here in Las Vegas now for 15 years. Although we're not that far away, we are in separate locations because we don't want to cough on each other. So welcome to the show. What today we want to talk about the changes. Boy, was it a wild ride back in 2017. And it seemed about like this just before that. You and I had a conversation. Next thing I know, your houses are getting destroyed in Puerto Rico, and we don't see you for a while. We were talking about doing a podcast together. So I think this is the first time we've actually done the two of us at the same time.
It's been a few. It's been a few years. I think we did something around 2016, 17, but 2017 was definitely a wild ride, and 2018, and then we had the crypto winter of 2018, 19, and then the halving, and it has been my experience, and I think a lot of other people notice this as well. Just like you have 10-year cycles in the stock market where everything goes crazy very slowly, and then it gets hotter and hotter and hotter, and then it bubbles up at the end of the decade, and you just wait for the black swan effect to happen. And you had the crash of 89, after the banks went crazy and savings and loans. You had the dot-com meltdown in 99, 2000, and exacerbated with 9/11. You had the Lehman Brothers and housing meltdown in 2008, 09. So they all kind of happen at the end of the decade. So you have these 10-year cycles where you have a slow run up, and then sort of near the end of it, you have like the retail frenzy and more printing of money, and then unfortunately the retail market tends to do all their diving in big and day trading and quitting their jobs at the top of the market when the smart money is selling. And the smart money is the one who basically, as Lord Rothschild said a couple hundred years ago, you must wait until there's blood in the streets, and then you buy, even if some of it's your own blood. And and in crypto, that's the same way, but it just moves faster. We typically have 4-year cycles around the halving of Bitcoin, and the first halving was in 2012, and it was $12 a Bitcoin, and people already felt wounded because, oh man, I bought it $30. I don't know if it's ever going to get back to there again. And obviously, if you bought it every halving and sold it, about a year and a half later, and then waited to buy back again at the next halving, you'd be doing pretty good. So, first halving $12, a year later $1,200, went up 100x. Not a lot of people were in 2012, 13. I was there, I remember. And then all of a sudden, when it went from 1,200 down to 800, everybody's like, "Oh, it's going to come back. It'll be 2,000 by the end of the year, 5,000. Go." But folks like Vinny Lingham and a few others were like saying, "No, it's not coming back anytime soon. It's going to keep going down, down, down," and it did. And because we're the opposite of the stock market, where you have, because we don't have any money to print. Ours only happens once every 4 years that you get sort of a change in the monetary supply formula. And so effectively, you end up having about a year or so until you get that kicking in, where if you have a steady demand curve of growth in Bitcoin, and you have a halving of supply every 4 years, it takes about a year for you to have what they call a supply shock, where all of a sudden when the price starts going up and people say, "I best be buying myself some Bitcoin," boy, it's double where it was at the start of the year. There's none of it around because the hodlers are hodling, and the miners are only have half as much to sell every day.
Right. So we just experienced the last halving here a few months ago. Is what happens past that? Is it now?
So I was telling everybody to buy at 8,500. I was telling people to buy at 3,500, but nobody was interested in buying at 3,500. At 8,500, they're a little bit more interested. And then when it hit 12,000, like, oh, should I be buying Bitcoin? And of course, right now it's at, I think today it actually had a nice day today. It started the day around 10.3 and it's about 10, I think it got as high as 10,700. So right now we're in sort of this channel that usually happens. So I haven't written anything on this. I probably should, about sort of the segments of the halving, right? So you have sort of the halving itself, where it just kind of stumbles around after the halving. Usually about 6 months before the halving, you have a run up because they're saying, oh, that like the British are coming. The halving is coming. The halving is coming, right? And so 6 months prior to this, just like 6 months, 6 months prior to the $12 Bitcoin in 2012, it was about $4. So it tripled, right? And then it kind of just bobbled around a little bit. It went up, it went down. It was, I think, $11 at the start of 2013, went all the way up to 250, and then it crashed back down at 50. And it went up to like, but the big run up was in a very short period of time in like November. Over about a 6-week period, it went from like $200 to $1,200. And then it had a slow meltdown, not a quick crash. And most of the 4-year period is a slow meltdown, just like most of the 10 years of the stock market is a slow rise. And so we're in sort of the second phase of the 4-year cycle, which is what the sophisticated investors, the whales, let's say, are accumulating more Bitcoin. So there's a channel trade that's going on right now where you're stuck in this little groove between about 9 and 12,000. Now, sometime it's going to break out. I think the magic number this time is supposed to be 14,000. I mean, if it gets above 14,000, you may remember last year in June, which was actually before it was supposed to in the cycle. And a lot of people are now saying that was the pump and dump of the plus token. That was this Chinese scam that pushed it up into the 13,000 range. And then it just as quickly fell back down once they got arrested and had to start dumping coins in the market. But no, I mean, we're going to have this, it's known as the accumulation phase. So I can't remember who said this, but it was, it's definitely an investor who's been around for a while, said when the prices are high, you have more fiat. When the prices are low, it's your opportunity to get more Bitcoin. Right. So if you had sold, any place over 15,000 to 19,000 in 2017, and put the money into houses and gold and bank vaults, and the worst place to put it was fiat money, but and stocks and bonds and Tesla and all that, and then you just waited until the crash happened, which typically the last couple times has been about 80% plus. So when all of a sudden you saw Bitcoin and everybody's like, oh, it's going to go below 1,000, it's at 3,500, that was only the start of last year. And you took some of your profits and bought back all the Bitcoin you sold at 15, 16,000 and bought twice as much at 3,500, you'd be able to keep the majority of the cash you had and what you put it into, and still have double the Bitcoin. So that's what's happening. That's what happens. Sort of, you kind of reloading your bags, as they say, at the bottom. And then right now you're just sort of like topping it off. And so there's a lot of people who will put in, they're either day traders or they're they've got sort of limit orders in to like buy anytime it goes under 10 and sell anytime it goes over 12. Wash and repeat.
Right.
Now that means you got to tie up a little bit of capital and a little bit of Bitcoin, but it's worth it.
The trading aspect of it is, I always like to say, it looks like something that would be a really good job to be doing, and guaranteed when I'm not paying attention to it, I'm going to buy, and the next day it's going to drop a little bit. But I'm more of a buy and hold and accumulate, because getting past whether or not it's a good commodity to trade, at some point this becomes something that's a permanent part of our economy.
Well, there's 3 strategies. There's buy and hodl, as they say. Right. I know people who bought Bitcoin when it was $100 or less, and haven't looked at it. They said, this is for my grandkids, or I'm not going to look until I'm till I turn 70 or they're 30 now, right?
Right.
And they have done themselves, in my opinion, a little bit of a disservice, because I personally like what's called swing trading, which is you don't have to be, spending your entire life by monitors and doing that. you can put it into a fund that does that for you. I'm actually invested in 2 funds that, one is Alphabet, which I've been a limited and an advisor to since 2017, early 2017.
Right.
And, they do some algorithmic trading, but they also, go and find the deals on the ICOs. And now they're investing in the next wave of digital asset coins and DeFi coins.
Right.
And, I'm at Transform Group, we're working with both digital asset coins and DeFi coins. And then I'm also now involved in a second fund that is purely an algorithmic trading company, and it's called Tradery. So Tradery Labs is the actual algo developer. They're a Puerto Rican company. And then Tradery Capital is the fund which will be launching later this year. Sure. And so I don't have the time, or quite frankly, the temperament to sit there going, I know people who just say, buy whatever's buy whatever's going up and then sell when it stops going up. And, but it takes a few hours a day that I'd rather have somebody else do. And I'm happy to pay them a carry on top of the profits to do that. Well, but on my own stuff that I don't have locked up in funds, I definitely look to see when it's top of the market or bottom of the market, and act accordingly.
Well, I've seen things and jumped on it before. The difference this time is that I saw the lockdown happen, and I'm watching 60 Minutes, and they're using Zoom instead of Skype, and I go like, oh crap, Zoom is gonna. I've been using Zoom for a year. And so I put in a little order for stock. It literally went from 100 to 150 while I was moving the cash in the account. Because I'm no trader. I was just saying I need to own a little bit of it. And
there are some things in the stock market that are
so
yeah. There are some things in the stock market that are no-brainers if you have time to watch the stock market and day trade and this and that, or do options trading.
Which is what I'm saying. Like, now I get obsessed to watch that, and I have a few others, but I'm in Vegas, so I bought a couple of casino stocks when I thought they were down last year. Oops.
Well, like I said, I don't have time to watch crypto and stocks. My wife's got stocks. I watch the crypto stuff. So, I mean, back before Bitcoin, during the 08-09 crash, I used to follow the maxim sell in May and go away, because most of your gains are between November and May, and you actually make more if you just simply keep it in cash during the summer. And damn, I'm glad I did in 2008, because I was in all cash when the crash happened, and I'm like, I think I'm going to wait to put it in, and I waited until April of 09, and by then everything was destroyed, and there was blood in the streets. And I actually put a third of all the money that I had into one stock, and that was Las Vegas Sands at $3.
Right. Yeah.
And so obviously I did well on that one.
It was up to 9. You and I were sitting, I think it was during a CES, at the Aquanox restaurant between Venetian and Palazzo. And you explained to me the economics of what was going on with Sands. And I'm going like, this is the way to invest, not what's hot, what somebody said, what somebody's talking about on a forum.
Right. No, I mean, that was something that Jim Cramer says on Mad Money that, you should have no more than 5 stocks in your portfolio if you're not like just doing a fund or something. And you should spend an hour a week on each of them. I think it's a little excessive, but I think you have to do a lot of research before you actually, I mean, what I did back then, and this is in crypto, but, I put a third into one stock that I really thought was just unbelievably undervalued. And even though I didn't have any insider information, I knew that Shelley's one of the brightest guys I ever met. And if he was like not bailing out, but he was actually buying more of the stock, there was a reason, right? And so clearly at $3 was a screaming buy, because they had more cash in the bank than that. And when they refinanced their loans, which is, I think the stupidest reason to like have a stock go down is someone says, well, they'll never be able to refinance their loans. Larry Ellison refinanced it for them, and the stock went up to 12. I got all my money back, and then some, and my wife said, no, don't sell it all yet. I think it's going to go higher. And I sold the rest at 60, which is about where it is today, because she wanted to go and buy real estate. But at any rate, so let's talk crypto.
let's talk about the uses of crypto rather than, because we're not all going to buy Bitcoin, hodl, and make money. That, you know, sooner or later, even if it goes to 100,000, $1 million, whatever it is, that's one thing. What do we do to change the world with everything else? And
well, the other thing also is that I think that if you're interested in crypto, as an investor, it's one thing, because I think there's no chance right now to make 100x on Bitcoin, but there is 100x chances all over the place every day to make it in altcoins. You just have to do your research, right? And certainly 10x. I mean, DeFi, maybe we'll do another show on DeFi alone, because the two hot areas right now are DeFi and digital assets. And digital assets, I'm working very closely right now with two tokens. Actually, one's a company, they don't have a token, and the other one is a token that also has a company. And I know you're going to have Jim Blasco, the founder and co-founder and CEO of Aspire, on later this week.
Jim's a longtime friend and friend of the show to be.
Yep.
He's blockchain radio. So
yeah, absolutely. And yeah. I've worked with Jim on a lot of projects for the last 5 years, and in actually 6 years, and then about 4.5 years ago, I put together a little incubator fund to basically just fund Jim's ideas. And the one that really made it out of the incubator, and we had some, you know, some good investors in that. That was like not a crypto thing. It was just a like Delaware, you know, Nevada, you know, just standard credit investor fund was Aspire Technology, and so that's now a standalone, you know, C Corp in Las Vegas that basically develops technologies for digital assets using the counterparty open source code that was a great open source code that basically got abandoned when the foundation kind of like fell apart. And Jim's always loved that, and I loved it. We actually used to work with Counterparty as a client back in 2014, 15 when they launched. And so when he said he wanted to sort of make a better, faster, cheaper counterparty, I was like, let's do it, you know? Mm-hmm. And so my incubator, BeCommerce Labs, invested a seed round. I then invested, a little bit more than the seed round to keep things going. And then, we've earlier this year, we got a number of other investors into our safe note, into the equity, and that built the blockchain. And fortunately, until probably Crypto Mom gets to be the head of the SEC, we can't sell things until they're on exchanges to Americans. But watch this space. We did have an exchange announce just recently that they are going to be listing us, and I'll let Jim go and talk about that. But right now, Aspire does have, on the usage side, to sort of just get into the space, build your own assets. You can build your own cryptocurrency. And it used to be, you remember the days, Warren, when it was $1 million to build a website?
Right.
Right. I mean, if you wanted to build a website, it was all like, who knows Netscape frames, and can they make, flaming logos? And then if you were a company, you'd go and say, I want a website. And you'd go to one of these people like IXL and, who are some of the other big ones? None of them are around anymore. US Web, and, they're big business, Scient and Viant, and, and they all went public at multi-billion-dollar valuations because they knew how to build websites. And so the big corporations would be like, how much does it cost for a website? Well, for you, what do you want to do with it? Maybe 20 million, 30 million. Well, now it's like, cheap it is to build a website. I mean, Wix will build it for you for practically free. And even if you want to go and get a sophisticated one, you've got these open source things like WordPress that makes it very easy to have a really good website for, thousands, not millions. And we're going to see the same thing happen with the blockchain. In the early days, even in 2017, people would raise $50 million for their ICO to build their website. Mm-hmm. It doesn't cost that much to build a website anymore. I mean, you can build something on an existing platform now and customize it. And that's really what Aspire does, because the first company to really do that was Counterparty. And in 2014, 15, a third of the entire coin market coin market cap 100 coins were built on Counterparty. because you could DIY. You didn't have to know very much programming. You could just, go and say, I'm going to build this. Here's how many coins I'm going to have. And then you could just, build some fairly simple functionality. And then you'd go and get your funding on that sort of, what do they call it in the rest of the tech world? Just a proof of concept or a minimal viable product. That's it.
Right. MVP.
So you can build your MVP on Aspire in 5 minutes, and for virtually no money. And right now there's a bounty program where they actually even give you the Aspire to build it, which, even after it's trading on the market and the bounty program is run out, it'll probably be under $1 to build your blockchain. You're building a token system. So it actually runs on top of a blockchain called Aspire Gas. And then Aspire is a faster, better, cheaper version of Counterparty for people who remember that. And all you need to know if you don't remember Counterparty is that you can go and build Warren Coin. You could build Warren Coin. I don't think the name's taken, for 10 Aspire and 1 gas coin. The Aspire Gas will last you 300,000 transactions per coin. So that's a long time. That's a lot of transactions. And you can build it up to 92 billion coins.
Right. Which can be used for utility in whatever it is that you're doing. And then,
Correct.
Of course, could turn into the next currency, but I don't know how many.
Well, I think in the future there's going to be. Do you remember in the early days of? I mean, I like to just go back to the early days of everything, right? I mean, this week they had a big thing that was crowdfunded by the Bitcoin Association of Hong Kong, and it basically had big signs saying "Be your own bank, Bitcoin" on billboards and buses, and they also had quotes of people who were naysayers of previous technology. And as recently as the 1960s, the head of the FCC said, "I don't think space satellites will ever have any influence in the telephone market or the radio market or the television market." And now they dominate it, right?
Yeah,
and,
now hundreds a month launched by Elon Musk. So
right. And so
besides the fact we don't live with them anyway, we're getting more
things that are technologically superior. I mean, Bill Gates said most people overestimate what they can do in a year and they underestimate what they can do in 10 years. About the only stocks that give you 10 years to see if they make it or not are biotechs. If tech stocks from the 90s were given 10 years, you wouldn't have had a dot-com bust. I mean, some of the biggest flameouts were online video companies. Brock Pierce's Den was one. Sudo was another one. And, 4 years later, you had a faster, better, cheaper YouTube that became one of the most dominant, parts of Google, one of the most dominant companies in the world.
Right. And we know that there's real breakthroughs coming. We really haven't scratched the surface.
So let's put it this way on assets, because I know we're running out of time in this show. There's two types of assets. There's fungible assets and non-fungible assets. And you don't have to be something tradable to or as they call it, convertible to dollars, or an investment opportunity to be a coin that has use. You could basically go and give away these coins for listening to your show, and all the redeemable for is like, a discount on some deal you have. They're called a closed loop system. If they're only redeemable for stuff that Warren has, then it's just like having, a really inexpensive and immutable loyalty program for your listeners.
Right.
And I think that's going to be probably 100 times the usage of stuff that's get rich quick scheme, right? And so that's just everybody. We're in conversations right now to Aspire with a pretty significant rock band who's iconic. I won't say who they are yet, but who wants to have one for their fans, and they'll just give away swag. And I remember when social media came out, and everybody's like, Twitter, look, you wrote one of the first books on Twitter. Everybody was saying, why the hell do I need Twitter? Who the hell cares what I ate for breakfast? There is a laughing stock. Now it's a multi-billion-dollar company, right? And people do care about maybe not what you have for breakfast, but they care about what you think if you're an influencer. And now influencers are, this huge part of the marketplace. Look how much Instagram's worth. Look how much Facebook is worth. Facebook's one of the biggest companies in the world. And when they launched, it's like, why do I care about where you're going to drink tonight? Who do I care about what your friends are? And so people didn't see in 2006 when Facebook got its first funding, the vision that Zuckerberg had. They just saw, oh, this is a joke, blah, blah, blah. It's easy to make fun of, right? Oh, these college kids trying to get laid, whatever, And, Match.com got sold from the original founder because they said, I don't think anybody's ever going to date online. So he lost his funding. I mean, they sold it for chump change because they didn't think it was worth anything. And Barry Diller did, and he bought it. Yep. Two things later. And so the same thing with cryptocurrency. App Store, remember, who thought anybody was going to use the App Store? Now there's billions of them, and they're not all Angry Birds, but they provide a lot of value, even the free ones, right? They get a brand out. And so I think that's what's going to happen with fungible assets. And then with non-fungible assets or NFTs, I mean, they're best known right now for CryptoKitties and the things that are developed on ERC 721. And I would like to get you to have you interview, I'd mentioned this before, Jacques Voorhees, who's Eric Voorhees' dad. Right. He started a company that I'm an investor in that's called IceCap. It's icecap.diamonds. And it lets you go and buy, investment grade diamonds, and they'll just sit there in a vault insured, and you can go and list them again. And, we're looking into ways of maybe you can go and use them in decentralized finance and, get a loan based on how well your diamond grades and the fact that it's sitting in a vault in New York City.
We're unlocking trillions in assets by being able to do this way. So
yeah, there's about $90 billion of new diamonds sold every year. And this last year, because Zales wasn't open and none of the department stores were open, the sale of finished diamonds from De Beers was down over 90%. But investment grade, is still something that people look at. And so I'm really excited about what IceCap's doing. And I'm really excited about what Aspire's doing. And, with Aspire, the gas to go and create a non-fungible token. So in other words, if you are an artist, right, and you want to go and create a great new painting, and you sell the original to a gallery, you then have serigraphs and lithographs. You can have digital serigraphs that are digitally signed, and maybe it's got a cookie in there that's unique to you or something like that. And those are limited edition of 100, and they're secured by an NFT. It doesn't have to be an ERC 721, which is the original, NFT. Technically, the original NFT was probably colored coins. That was back on the Bitcoin, 8-9 years ago. And there were NFTs actually on Counterparty. They had these things called rare Pepe digital trading cards. But the problem with the original Counterparty was the gas for it was Bitcoin. So when the price of Bitcoin transactions went up to $20, it killed off Counterparty. Nobody wanted to spend $20 a transaction. And quite frankly, right now with the rise of popularity of DeFi, decentralized finance, the price of gas on Ethereum right now, it's been as high as like $20, $30 per transaction. And that means that, like, if you've got a CryptoKitty, or you've got something that, you're selling for $5, I recently was the unknowing subject of the Blockchain Heroes series, which was, I think, ERC 721s, and they sold a bunch of them. And I was the crusader for the stuff I'm doing against try to get my money back from AT&T and get the laws changed so that the SIM swapping is stopped. So I had a little cartoon that, our mutual friends at the Bad Crypto podcast commissioned an artist and, did 500 NFTs, and they sold out in a few minutes. And, wish they'd offered me one, or maybe the original. I'll have to give them a call.
Everybody wants a piece of your money.
Now everybody wants a piece of, like, a collectible. And if you know that it's provable and it's not faked, right? I mean, that's the biggest problem with, like, everything from, like, trading cards to, like, celebrity. I mean, look, if you've got, this is a home once owned by Mike Tyson in back of me here. If you want to go Mike Tyson boxing gloves, how do you know that that's the real signature there? How do you know that's a real something really authenticated? Well, it is if it's on the blockchain and you trust the source. If he's got on his site, I've made a deal, with Aspire or with ERC 721 or Bad Crypto or any of the places that are publishing, because nobody has a deal with them right now that I know, and I'm not trying to imply that. Him or other celebrities can say, oh, I'm now able to go and market, my unique digital collectibles, and have them, not even shipped. They can just be on the blockchain. I own them, and I can get them out of the vault whenever I want them, just like you can get the diamonds out of the vault. So that is going to be a huge area. And Aspire also allows unlimited amounts of, of non-fungible tokens that, again, cost like, depending on how you structure them, way less than it would for the gas of an ERC 721 transaction to make and sell and resell 100 times.
Right. So we're going for the big thing that's going to help us in everything in life in the future is reducing friction.
Yeah.
All of these, you've told us several stories of where the cost of Bitcoin for the transaction, the gas, whatever, got to be too high and ruined companies. But in the future, friction is gone. Supply chains function better. Assets are a little bit more secure. I mean, I can still create a fake and put it on the blockchain, but it's going to be a lot more traceable than it ever has.
Well, I think, and I'll leave you this, I think we're going from the .com era of crypto, which was 2017, 18, where you would, create a business plan and get $50 million for it. That's what happened in the .com world. And then when that collapsed, everybody said, what were you thinking? Amazon's going out of business and Walmart will always win. And then the ones that survived that shakeout, that were the real entrepreneurs. I mean, you could have bought Amazon for $5 back after the .com crash, 3,500 today.
Yep. Well, and actually, there's another great example of having to go way back in history. Before Walmart, there was Kmart. Before Kmart, there was Sears. There was a lot before that. Department stores, regional, local, national chains that developed over the 20th century. And you could see, in college, I was told that by a guy that had been a high executive at Kmart that something was going to come and knock it off.
Yeah.
And he was absolutely.
Well, the point I was making about the .com thing was the second wave of the internet, the consumer internet, where it became, big and known. The first wave was the .coms, and then everybody was like, how stupid were we? This is never going anywhere, right? But the true believers were like, well, wait a second, this internet thing actually works. It just needs better GUI and better bandwidth. And the next wave was the unicorns. The next wave was not like roadkill. It was things bigger than ever happened in the first wave. The first wave was Amazon and eBay. The second wave gave you Google, gave you Facebook, gave you really the next wave of growth of Amazon, and Netflix. And, these are the trillion-dollar companies now, not just billion-dollar companies. Right. And so I think, and they call that the unicorn era, right? And I think we're going to be approaching the unicorn era of crypto. So I think not only that Bitcoin is going to be considerably higher than $20,000 by the end of next year, I've said that for a long time, but I think that it's going to be less than 50% of the overall market cap, because I think you're going to have these other new innovative blockchains that do things other than just store a value.
Right. Yeah, and Bitcoin at best is like gold. It's something that's, storing some value, and it's not, you don't take a gold brick into 7-Eleven and buy a Slurpee. Really hard to give change.
No, and blockchains, it's what irks me about Bitcoin maximalists. It's like, Lord Satoshi came up with the 10 commandments of Bitcoin, and like anybody who violates them will be struck down, and everything else is garbage, and Ethereum is garbage, and this and that. It's like, no, Bitcoin is superior to anything else for what it does, which is having an almost impossible to hack, never been hacked, even a lot of, and it's a size where if you want to go and send, $1 billion in, instantly from one part of the world to another part of the world without having to go through a bank, the only place you can do it is Bitcoin, right? With your fee would be about like $30 or something. Right. In the old days, you can still do it technically with no fee, but it might take a long time. Right. But it's not going to do smart contracts probably ever as well as Ethereum and some other newer smart contract languages are. And look, it's it's a multi-chain future. I mean, that's what Andreas Antonopoulos says, and he was one of the original kind of Bitcoin promoters. He's never been a maximalist, though.
Yeah, I mean, you just mentioned smart contracts, and I'm thinking, God, at least a whole nother show talking about that.
Yeah.
Because I like talking about.
But a lot of people don't need smart contracts, right? It's needed for certain things, but for going back to Twitter, I mean, I remember when some of the really big ad agencies in Hollywood, hired hundreds of people to sort of like help manage celebrity Twitter accounts.
Right.
It was basically a glorified fan club. In fact, the CEO of one of the companies said, "Yeah, it's a fan club. It's cheaper than mail. You go and you get people to retweet and they win tickets."
Right.
That's going to move to crypto now.
Exactly. Yeah.
And by the way, as you know, social media will inexorably move to crypto. I mean, Facebook has probably reached its height of possibilities. And why do you think they want to move into Libra so badly? Because they know that they're going to have really good decentralized competitors that are not selling their data. And I'm an investor in a company called MeWe, which doesn't sell data. It's a social network. It's got about 8-9 million. It's growing fast. But they're like, hey, if we have the crypto, maybe we can rely a little bit less on this. If you are using Libra, you can opt out of certain types of ads or whatever. But they're very smart, and unfortunately, the U.S. government's probably not going to let them launch.
With increases in speed and storage and just technology in general, we're going to have more and more things that are able to be tried, more granularity. So I can say that I want to share X, Y, Z, and Z ought to. I mean, you can just go on and on of what you want to do and what you don't want to do. Instead of right now, the settings of some of these things are still very general. Yeah. And do you opt in? Do you opt out? Well, those kind of policies can be set up on your account, on your identity. We just did a show with DNA Block, and they're talking about games and avatars, and that obviously extends to, at some point, I have a digital identity that I control what it is. I go to see the doctor, he can see my health information.
So Warren, I got to get off in about 3 minutes. We should probably do one of these a month. I could talk to you all day.
I'm at that point where I need to tell people, what do you want to hawk? We've got to promote something, or that's why we're here. Where does somebody find out more about you and follow you?
Yeah, so I finally have my Twitter account back, because again, another thing for decentralization, I've been off Twitter more this year than I've been on, because people constantly try to hack me because they try to steal crypto. And so when they try to hack my Twitter account, it goes offline, and I have to keep proving who I am to get back on it, which is crazy, right? And of course, they have really bad customer support. But I, for the moment, am at Michael Terpin, at MICHAELTERPIN. And I'm that on Twitter. I'm that on Telegram. There's a lot of people who pretend to be me. And if it's not at Michael Terpin, on every platform except for Skype, I'm at my MICHAELTERPIN. And the only reason I'm not on Skype is because I got it so many years ago. I had something else, and Microsoft wouldn't let me change it to that name. So, but everything else, I have that. And then also, I mentioned about digital assets. I'm very proud of Aspire. They're at aspirecrypto.com. You can go there, and you can also go to Aspire once you read and see if that's something you want to play with and create your own digital asset. We still have a campaign giving out free bounties so that you can go and create your own digital asset for free. This will not last forever. And you just can go there, and you can go then, once you read up about it, you can then go to aspirewallet.com and get your tokens free to create your own Warren coin. You need to do that right after the show.
I'll have to do that. It's funny, the first NFT conversation I had over 3 years ago, somebody was saying there ought to be a Warren coin, and they were going to make it for me. Haven't got it so far, so
you can make it yourself. It's that simple.
Yep, just now I can do it myself.
That's right.
I wasn't excited about getting it, but it's still out there. Hey, that's nice. Why not? Or maybe a distributed conversations coin. That's a little bit too
absolutely.
We'll come up with something. Great.
We can come up with something.
You know, we might want, each of us want to plug, I'm at warrenwhitlock.com and distributed conversation. We might want to plug Bid Angels. That's how you can meet more people like Michael Terpin, and even clowns like myself are in the network of people that are investing. And Bid Angels, give us 30 seconds on that and we'll end there.
Sure. So Bid Angels is something that I started in early 2013 with David Johnston, who's an icon in the industry. You should have him on sometime. He's got some really cool stuff going on right now. I just invested in his new company. Excuse me. He's trying to actually right now to become the Warren Buffett of crypto. So he can talk to you about that.
Oh yeah, we're gonna have to talk to him. And but Bid Angels is now
Bid Angels is now it's bidangels.network, and it's in 15 cities, all virtual right now. You can get the whole schedule at bidangels.network, and that also spun off the Coin Agenda conferences, and that's at coinagenda.com. And this will be the first year we're not able to have a physical event in Las Vegas, but we are going to have a global event in the end of October, virtually in Las Vegas. We're going to get some great speakers like we always do from around the world.
Well, I know I've attended so many of these events. I've worked on them of late, but back in the day, as long as I've known you, I've gone to your events, and always interesting people I meet. And one, I can't get to the one in Barcelona. I just get meeting that. Well, you can right now. You can attend wherever they are. There isn't one coming up in Barcelona, but what do we got? We got one.
We got Las Vegas.
Yep, we got Singapore.
Yes.
So around the globe, and Singapore was just, it was like being different. It was a different place, going to a different location. So now, good time to travel. bidangels.network. Okay, thanks for being here. Thanks a lot. Guest has been Michael Terpin. This is Distributed Conversation. We'll see you next time.
All right. Thanks, Warren.